This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Market slide, why three factors that propelled the recent rally may be starting to reverse.
Costly defeat. Johnson & Johnson lost another talcum powder cancer case, and a lot more are looming.
And hitting the gas, why the boom in auto sales isn't tapping the brakes just yet.
All that and more tonight on Nightly Business Report for Tuesday, May 3rd.
Good evening, everyone, and welcome. I'm Sharon Epperson, in tonight for Sue Herrera.
And I'm Tyler Matheson. Welcome from me as well. Well, global growth fears found their way back into the market today. And some of the reasons for today's triple-digit decline are all too familiar. A fall in oil prices, a drop in Chinese manufacturing activity, and signs that growth in the Eurozone may be weaker than previously thought. That pressured stocks. The Dow Jones Industrial Average dropped 140 points to 17,750. NASDAQ fell 54, and the S&P 500 was off 18. And as Bob Pisani points out, the very things that have been driving the market higher for nearly 3 months seem to be starting to shift.
Stocks were down today as three key tenets of the recent market rally all reversed a bit. First, there's the China problem. China's been stable recently, but the economic data has been choppy and kind of hard to read. Overnight, the manufacturing numbers were weaker than expected, and that is predictably causing commodities and commodity stocks to weaken around the world. Second problem is the dollar. It's been notably weak this quarter, and that's also been a big help to commodity stocks and big U.S.-based exporters. But some are starting to question whether the dollar's fall is now over. Indeed, the dollar staged a big reversal today. The third problem is oil. We know that it's off the February low of roughly $26, but it's dropped about 5% in the last few days as it's become clear that production is still very high among the biggest players around the world, and that's unlikely to come down much. So is all this the start of something? Well, if it is, it's pretty modest so far. As with all the market leaders, energy, materials, and industrials are now susceptible should there be even a modest pullback. That's why they're down a lot today. And so far, modest is all we're seeing in the broader market. Look at it this way. The S&P 500 was at 2,100 at the end of April. So we're only 2% off of that. So far, this is a modest garden variety pullback, not even a correction, at least so far. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
An interest rate hike in June is a real possibility, so says the president of the Atlanta Fed. Dennis Lockhart said the financial markets may be underestimating the probability of a central bank rate hike next month. Last week, the odds were halved when the Fed signaled little urgency to tighten.
America's appetite for new cars and trucks remains strong. After a sluggish start to the year, automakers today reported healthy sales for the month of April. As had been the case for the last 2 years, pickups and SUVs are the models most in demand. Phil LeBeau explains why auto purchasers are back on track.
As the weather warms up, so have auto sales, with 3 of the country's 4 largest automakers reporting a slight pickup in sales. Speaking of pickups, sales of the Chevy Silverado and Ford F-150 remain red hot, as do sales of SUVs, which are benefiting from relatively low gas prices and Americans continuing to pass up buying a car in favor of a bigger crossover or SUV, which offers more space and utility. While automakers offered greater incentives to entice buyers last month, the deals were offset by consumers paying more. TrueCar says the average vehicle now sells for more than $33,000. With the sales pace for April topping 17 million vehicles, the industry remains on pace to match or maybe even exceed last year's record run. From now through August will likely be the busiest stretch of the year for auto dealers. If consumer confidence remains high, this could be a record summer for the auto industry. Phil LeBeau, Nightly Business Report, Chicago.
There are reports this evening that Takata is preparing to recall at least another 35 million airbag inflators. As first reported by the Wall Street Journal, regulators have deemed these inflators a safety risk. The recall could affect tens of millions of cars in all and will likely be made official this week.
New drugs for cancer and arthritis help Pfizer report a solid quarter and top earnings expectations. The largest drug maker in the U.S. also raised its revenue and earnings forecast for the year. The company citing the weakening dollar as part of the reason for the improved outlook. CEO Ian Reed said the company is considering a potential separation of its innovative and established businesses. And this follows the abandonment of its $160 billion deal for Allergan last month. Pfizer shares rose more than 2.5% in a down market.
A former pharmaceutical executive may now face new legal trouble. Martin Shkreli appeared in court today where prosecutors told a federal judge that they were considering additional fraud charges. Shkreli is best known for raising the price of a decades-old medication. But this case relates to alleged securities fraud and conspiracy to commit securities fraud during his time as the CEO of the pharmaceutical company Retrofin. He was arrested late last year.
Johnson & Johnson is facing a growing threat of lawsuits related to a product that many of us have or have used in the past, talcum powder. A jury ruled against the pharmaceutical company for the second time in 3 months. Bertha Coombs looks at the legal issue and the potential risk for J&J shareholders.
Johnson & Johnson's baby powder has been one of the company's iconic products for more than a century. But now J&J faces more than $100 million in damages and potentially a lot more from lawsuits claiming its talcum causes cancer in women. On Monday, a jury awarded $55 million to a South Dakota woman who claimed J&J's baby powder caused her ovarian cancer. 3 months after a $77 million award to the family of Jacqueline Fox, who died of ovarian cancer 4 months before that trial. The plaintiffs argued the company was aware of studies which raised an association between the use of talcum powder used for personal hygiene and cancer. But in court and in a video statement on its website, J&J cites research which finds no cancer link.
The safety of talc is based on more than 30 years of data generated by authoritative researchers. We are confident in our position that there's no causal association between talc and ovarian cancer.
The company says it will appeal the jury awards, but there are more than 1,000 cases pending of women claiming they contracted ovarian cancer after using its baby powder for decades. Eric Gordon of the University of Michigan thinks it's likely the company may move to settle eventually.
Johnson & Johnson is going to maintain till the end that the product is safe, but I think the strategy of how you handle these cases is going to change. It's time for them to seriously think about settling as many of the remaining cases as they can.
Analysts say for investors, the lawsuits don't present a large risk for now. The company's consumer division makes up less than 20% of its business, but more losses could pose a PR problem for J&J.
So this isn't some technical, scientific, medical device that nobody really understands. This is something most of us have had in our bathrooms. The possibility that it could cause cancer is a real blow to the brand.
That could pose a big problem in the court of public opinion, even if the data is mixed. For Nightly Business Report, I'm Bertha Coombs.
Let's turn to our guest now to talk more about what all this ultimately might mean for Johnson & Johnson and how it could impact you and your money. Catherine Sharkey is a law professor at New York University, and Marshall Gordon is portfolio manager with ClearBridge Investments. Ms. Sharkey, I can't imagine anything more damaging potentially to a brand and a company than an accusation, which has now been supported by 2 juries, that a product causes cancer. Do they have to take this product off the market immediately or risk really even bigger judgments against it?
Yeah, well, they certainly do have a public relations issue on their hands. This is not only an iconic product, one that many consumers have in their bathrooms, but it also has associations. Omnipresent in the nursery, brand loyalty with women who continue to use this product after their babies have grown. So there's that dimension to it. Whether they will decide to settle these lawsuits as a result of this public relations issue remains to be seen.
Marshall, it of course is a public relations fiasco here and brand damaging, but what about for investors who may own Johnson & Johnson? What impact will that have for them?
I don't see this as particularly consequential to the overall picture of Johnson & Johnson. Unfortunately, lawsuits are really part of doing business in the medical world today and healthcare world. And for a company as large and as diversified as J&J, this is a company with a $70 billion sales each year, about $1 billion or more in free cash flow per month, and $300 billion of market cap. They can absorb what I think will eventually be a relatively modest settlement and really won't impact investors terribly much.
Really? I mean, this goes right at the heart of the company's integrity, doesn't it, Marshall? In other words, if they are selling a product to women and mothers that is has a cancer-causing risk, that would seem to me to be a very serious threat to their basic image.
Well, I do believe that they need to be very careful about how they handle this situation to avoid damage to their image. One thing that I would tell you is that this is a company that has been very adept at managing situations in the past. And if you look at J&J's very long history, look at what they did with Tylenol many years ago. That was a major risk to the business, and they had turned that recall around into something where they became an industry leader in safety. So I think it really, I do acknowledge that there's a risk, but I think that the J&J management team is capable of navigating this. And they need to tread carefully to maintain the company's image and limit the damage to consumer brands.
But Catherine, there are 1,400 or so pending lawsuits. There's still quite a bit unknown out there about how much damage may be in the future for J&J just based on this alleged connection between talc and ovarian cancer. So could that potentially be an even greater risk and a greater investment risk because we don't know the outcome of those verdicts?
It could. I guess the point that I would highlight is that there was a component here of a punitive damages award. So the jury in this case found not only that the product caused cancer, not only in some generic sense, but in the particular situation, but they awarded punitive damages. They awarded $50 million of this verdict is in punitive damages, which is supposed to be for particularly reprehensible conduct. And it appears, my understanding is that companies will often go to pretty great lengths to settle out cases, to pay maybe even larger awards in damages to avoid having punitive damages, because that can take a real reputational hit for those.
All right, Catherine Sharkey with the New York University School of Law, Marshall Gordon with ClearBridge Investments. Thanks very much.
You're welcome.
Thank you.
Still ahead, beating the odds, the big money behind the unlikeliest of winners. Donald Trump and Hillary Clinton are hoping Indiana voters help them seal the nomination. Ted Cruz and Bernie Sanders are looking to Indiana to give their campaigns some hope. John Harwood is in Washington with a look at this critical primary. And John, how high are the stakes really tonight?
Well, they're especially high, Sharon, on the Republican side because the Stop Trump forces have been looking to Indiana as the place they could plant their flag and say, if we can beat him here, we can complicate his path to getting the 1,237 delegates he needs for a first ballot nomination. If they can't do it, if Donald Trump wins tonight, that suggests that the opposition is collapsing to Trump, and that by the time he gets to the California primary on June the 7th, that he has the potential to go over that number that he needs. On the Democratic side, it's pretty clear Hillary Clinton's going to be the nominee. Bernie Sanders almost openly concedes that, so the stakes are lower on the Democratic side. Polling has been close. Hillary Clinton's had a slight lead. How, particularly on the GOP side, have the candidates been handling the pressure as we get down to the wire? Not very well, Tyler. This campaign in the last 24 hours has really gone off the rails. You've had Donald Trump raising the specter of a completely unsubstantiated National Enquirer story suggesting that Ted Cruz's father, who had emancipated from Cuba, might have somehow associated with Lee Harvey Oswald, the assassin of John F. Kennedy. Of course, Rafael Cruz denies that. And Ted Cruz went off on Trump today, said he was a pathological liar, said that he had been a serial philanderer. It really got ugly in this race, and it suggests it's going to be difficult to bring the party together if, in fact, Trump is able to nail down that Republican nomination.
Is it possible, John, that the outcome of tonight will let us know that the general election is really beginning, that campaign is really beginning tomorrow?
I think so. That's certainly the indication that we've gotten from both the Trump and Clinton campaigns. They believe it's moving in that direction. And I got to tell you, Sharon, this is going to be a nasty general election campaign over the next several months, not an appetizing spectacle, because you've got two potential nominees, if in fact they do emerge as the nominees, with very high negative ratings, very skeptical public looking at them, and the opponents are going to try to maximize those doubts in the public's mind.
Unappetizing as it may be, we'll all be watching very closely. John Harwood, thank you. In Washington, thank you.
CBS gets a Super Bowl boost, and that is where we begin tonight. Market Focus. First quarter earnings rose 20%, topping expectations. Strong Super Bowl ad sales the reason. CEO Les Moonves said he expects to see even more growth in advertising later this year as political spending increases closer to the political election, appetizing or not. Shares of CBS rose initially in extended trading. They finished the regular session down more than 1% to $55.65. Revenue rose by nearly 19% at the drugstore chain CVS. Results there lifted by strong sales in the company's specialty prescription drug unit. CVS reaffirmed its full-year profit forecast, but said it expects next quarter's earnings to fall below expectations. Shares up more than 2%. They finished at $103.92. The New York Times reported a loss for the first 3 months of 2016. Revenues also declined, but not by as much as analysts had feared. Digital subscriptions did rise in the quarter, and the CEO says he remains confident in the company's ability to grow its digital ad revenue. But shares did fall more than 3% on the day to $12.45. And biotech company Biogen will spin off its hemophilia drug business into a publicly traded company, a move Biogen said will create the best value for shareholders. The spinoff expected to be completed by later this year or early next. Shares of Biogen closed flat at $273.71.
Tyler, Sprint reported a wider than expected loss for the latest quarter and also added fewer subscribers than analysts were expecting. Subsequently, the wireless phone provider plans to trim more than $2 billion in costs this year, a move that prompted the company to raise its guidance for the full year operating income. Shares were up 5% to $3.67. Low commodity prices continue to weigh on oil field service provider Halliburton, as the company reported losses in both profit and revenue. After a failed merger with Baker Hughes, Halliburton said it will consider other acquisitions in the future. Shares of Halliburton were off nearly 4% to $40.44. MetLife has agreed to pay $25 million to settle an investigation by a securities industry regulator in which the company allegedly made misrepresentations to customers regarding variable annuities. As part of the settlement, MetLife neither admitted nor denied the charges. The shares of MetLife fell 2% to $44.79.
An incredible triumph in the sports world. Leicester City Football Club overcame 5,000 to 1 preseason odds to clinch the English Premier League title. It is one of the greatest upsets in sporting history, especially for a team with a payroll a fraction the size of its rivals. Eric Chemi is with us now to discuss the money behind the victory. Let's start with those who placed a bet on Leicester before the year started. I assume that most of the sports books, the house always wins because there was more money moving on the favored clubs like Chelsea or Man City or Man United. But they had to lose a lot of money on Leicester.
They had to lose a lot of money on Leicester because if you just put $20, then you win $100,000. So it just takes a few people to do this and blow it up for the bookmakers. In fact, the bookies that we talked to, not the street bookies, but guys that are running real operations in
William
the U.S.
Hill and so forth.
William Hill in the U.S. and in England lost 6 figures in the U.S. on all of their English soccer. So even all the games that they got on everyone else getting it wrong, they still lost a lot of money. Numbers in England, about $20 million or more. That's what they'll admit. They say it's an 8-figure number, which means it could be up to $100 million of losses just on soccer.
What about the players on Leicester's team, the ones who were making a fraction of what players on other teams were making? I heard by one account, there's one player on Manchester United that's probably making as much as the entire team. So how did they fare?
Manchester United has spent more in the last couple years on players than Leicester has spent in the entire 130 years that Leicester has been around. So they have a really good scouting department, and they found people that other teams didn't want. So they were able to get them for cheap. They were playing in other countries, other leagues, lower division teams. Nobody wanted them. They found players and they turned them into value. So this is really a story about deep value and turning it into profits.
You're telling me. Well, two questions in one here. What do we know, or can we surmise anything about the value of Leicester City as a franchise? And have there ever been comparable long shots pay off like this?
The team's owned by a group of Thailand investors. By winning the league, they get to be in the Champions League. They get more money for that. They get more TV money next year. So $100 million is probably increase in the value of the team just in terms of next year's revenue. So if they can repeat next year, that'll be the story. We've never seen a long shot like this before because this was an entire season. It wasn't just a playoff. 100-1. Those are the odds that UConn had when they won the NCAA tournament a few years ago, but they had to just win 6 games. This was a 38-week season, like we know with the stocks in the long run. You can have a good month or two, but it's hard to have it for an entire year.
All right, Eric, a fabulous story. Thanks very much, Eric Jimmy. All righty, coming up, it's where sports and fashion collide, but not everyone comes out a winner.
Grocery chain Fairway has filed for Chapter 11 bankruptcy protection. The company has cited competition from other supermarkets, including Whole Foods and Trader Joe's, as well as online shopping and an aggressive expansion plan. The retailer plans to exit bankruptcy soon as it revamps its balance sheet.
Aeropostale reportedly preparing to file for bankruptcy. According to the Wall Street Journal, the teen retailer plans to seek Chapter 11 protection in the next few days. The retailer would close more than 100 of its 800 stores soon after that filing. Rival teen retailer Pacific Sunwear sought bankruptcy protection just last month.
Sports Authority isn't fully liquidating just yet. Attorneys for the sporting goods retailer told a federal judge that the retail chain, which filed for bankruptcy protection last month, is still pursuing a sale process. Last week, the company's attorneys said Sports Authority would not emerge under a reorganization plan.
And while Sports Authority is one of a handful of athletic wear retailers to come under pressure, some are in much better shape. Courtney Reagan explains why.
While sales of traditional apparel continue to be sluggish, sales of athleisure or athletic wear or sports equipment or simply leisure continue to grow. But not all retailers that sell athletic apparel and equipment are thriving. Sports Authority, Eastern Mountain Sports, and Sport Chalet are all filing for bankruptcy, while Lululemon, REI, Nike, and VF Corp's North Face are among the outperformers. There are a number of factors separating the all-stars and those on the disabled list. First, many of the athletic brands' own websites and stores are hurting sales of their goods at retailers like Sports Authority. For instance, you can only customize a pair of Nike shoes on Nike's website. Second, off-price options like TJ Maxx and outlet stores offer consumers lower prices on athletic merchandise. Plus, department stores like Macy's, JCPenney, and others offer their own athletic wear brands for often lower prices. Also, Sports Authority, Eastern Mountain, and Sport Chalet are all privately run and laden with debt, making restructuring harder than it could be with public competitors. But perhaps most important, connecting the consumer to an experience, like being a part of the community of dedicated athletes, plays a bigger role in selling athletic wear and equipment than it does in other areas of retail.
The game has changed. It's not about having a brick and mortar store and putting a commercial on TV and selling the product. I think now it's really becoming, to sell the product, you need to be part of their everyday lifestyle. The cost of doing business so much higher. To do this, you have to spend the money and be ahead of the game. That's what I think the Nikes, the Under Armours, the Lulus, I think that's why they're capitalizing.
Consumers spend time in Lululemon stores, not only to buy yoga pants, but to practice yoga there too. Nike and Under Armour both have sophisticated apps to not only guide a consumer's active lifestyle, but insert product recommendations as well. At Co-op REI, shoppers are also shareholders in the business, and 2015 was a record year for both. The purchasing literally pays them back in the form of an annual dividend. For Nightly Business Report, I'm Courtney Reagan.
And finally tonight, history is made on Broadway. Hamilton, the hip-hop musical about America's founding fathers, picked up 16 Tony Award nominations. That breaks the record set by the producers in 2001 and Billy Elliot in 2009. As of last month, the show has grossed more than $60 million at the box office since Broadway previews began last July, and that's according to Billboard magazine. Premium tickets, well, they sell for just about $550 each.
And I think the show is why Hamilton is staying on the bill.
It's so wonderful. It's had such an impact, such an impact.
Amazing.
It's an amazing show. That's Nightly Business Report for tonight. I'm Sharon Epperson. Thanks so much for watching.
And I'm Tyler Mathisen. See Hamilton if you can. Have a great evening, everybody. We'll see you tomorrow.